Everyone, this is Brian Shannon from AlphaTrends.net. Today is Sunday, the 23rd of December, 2012. Let's take a look at the markets for this past week here. The S&P 500 was up about a half of a percent. In fact, all the markets were up except gold and the bonds. But we had it didn't end the week feeling like the markets were up, as we did get hit pretty hard actually on Friday. But let's take a look at the action here. We do still remain above that 50-day moving average in the S&P 500, and that pattern of higher highs and higher lows does remain intact, although we're right near the bottom end of that and in jeopardy, I guess, of making a lower low here. So what we want to see for this week ahead is likely the 141-ish level hold for support. If it can do that, it has the possibility that it'll find stability above this 50-day moving average and then begin to at least turn a little bit more neutral. Friday's action was a little bit disturbing as far as the trend development and continuation of that trend rather. So we have actually, if we take a look at the volume by price chart too, we can take a look. I'm going to do that is put in the volume by price. We'll see that this has been a large area of volume in here, so it should act as support. So breaking below 141.5 and staying below it, I think, would be a damaging thing for the S&P 500. So that's the main focus: is can we hold above about 141.5? If it does, then we're going to look for stability in this market and perhaps a rebuilding to continue higher, as the weekly time frame still does show that pattern of higher highs and higher lows. And we're kind of, if you look at a trend line, you're not supposed to pass through prices, but this is kind of the essence of trend. We have more of a channel trend line here, if that makes sense, where we have these levels that have been hit, and that's down near about 139.5. So if that 141.5 does let go, then perhaps we're headed down towards that level. But for now, I do think that that this market should hold above about 141.5. The Nasdaq got dropped right back down again to a key level, which is the 6450, and this has been tested quite often here over the last month. So we're going to have to be aware that we have the possibility, as you know, we've been talking about this 66 to 66 and a half level as being important resistance. The market finally broke above that and then kind of caved in below it. We still have that declining 50-day moving average in the Nasdaq, which tells us to continue to be cautious. So 64 and a half, really, if we take a look at a intraday time frame, we can see a little with more clarity here, and that is that this is a real key level. If we're to get below 64 and a half and hold below it, I think, for more than a half hour or so, then it could be quite damaging for the week ahead. So be very aware of 64 and a half in the Nasdaq. Otherwise, perhaps we'll be able to find some stability in here and continue to see some back and forth action as that 50-day moving average flattens out. The Russell 2000, as we saw here, did have a good week. It was up 2.2%, and this has been the stronger group with this. Previously we had seen the 83 area be very important. Now I think it's a little bit further emphasis on that level, as it is about where we have that rising 20-day moving average as well. But it was still a constructive week for the Russell 2000. If we look at this intraday trend line that's based off the essence of trend, some people will draw a trend line off these lows, and we're going to continue to break through it at various levels. Instead, this has been what's really represented, again, the essence of trend, and then we have a little bit of support here, and this is the 83 level. So I think that 83 is going to continue to be important this week because, and basically 82 and a half to 83 was our band of, this is the important band of prior resistance, which should become support as well. So once again, we want, the name of the game is to see if it can hold above those levels. If it breaks below them and stays below, then perhaps we're going to see a little bit further pullback. But right now, with this 50-day moving average flattened out, a rising 10 and 20, I don't think that we're likely to really fall apart. But we have to, as always, be aware of what are the possibilities and what could really damage this market. The semiconductors have had this 3230 to 3250 level that was acting as resistance. We pulled back pretty steeply on Friday to that level once again, and And I think that this should be able to continue to hold as a level of support. So really, here's the important area that should be support, and you could call it really $32.30 to $32.50. This market, the semiconductors that is, have had a nice run in here just recently with a real nice pattern of these higher highs and higher lows with the rising 5-day moving average, and I think 32.30 is the important level that we're going to want to see continue to hold. So here again, essence of trend, you could say maybe that it's broken, and we need to turn sideways to correct this larger run here of the last month, which has seen the semiconductors come off those lows by 10% or so. The financials still had here again, let's take a look at the financials for the week. They were up 2.5%, and they did break to new highs for the year as well. So when we look at this weekly time frame, we can see that they had broken to new highs for the year, and is often the case when you get a new high for the year. A lot of times we'll run up beyond those highs briefly and then pull back, and that's what it looks like is happening in here. But still very bullish action as we're above all the moving averages. All those moving averages are rising. This has been the kind of the band of resistance in here. We kind of closed right on it at that $16.40 level. Looking at a 30-minute time frame, here we can see we've got this trend line, and we've got this prior little resistance at about $16.30. So this week going forward, I think that $16.30 is going to be something that we want to see hold. If it, even if it's $16.30 fails and we get down towards 16.20ish, I don't think that would be a bad thing. But the financials still are in a clear uptrend here, and even on Friday, the buyers did come back in for the most part and at least stabilize this market for here. But until we can really kind of see how all these gaps from Friday play out at these key levels of support in the larger indexes, we want to remain pretty defensive in there. Gold had a rough week. By the way, this is Realtick here, the Realtick software. That's what we're looking at in terms of the charts every week. I get questions about that, and Realtick sponsors this YouTube show on Fridays. Let's take a look at gold here, because gold, we had been talking about this inverted head and shoulders pattern forming about a month ago, and then as it broke back down below here, that kind of invalidated it. We were looking at if it had gotten above 175, that could have been the bullish scenario for gold, and here's that 175 level here. Well, instead, what we've seen is again it had broken down, and what I've drawn in here is pretty is this retracement level off of the summer lows. So if we go back just a little bit further and take a look at the summer lows, which were the lows for the year as well. So the years for the year low occurred rather in May, June, and if we take a look in here, if we go off of that low to the high that we'd seen in September, the market came down and retraced almost exactly 61.8%, and that's where it found a bounce on Thursday. Another interesting thing here that a reader had pointed out is that the symmetry of these legs lower. So if you take it from this peak right here to this pullback low, what I've done is drawn two lines the exact same height, and what we're going to do is take it and put it right there, and you can see that we've had a very symmetrical move in here. Not only was it a 61.8% retracement, but this would be what's known as the measured move. If you call this point A, this would be point B, and so the point is from point A to point B, and then it rallies to point C, and then we get projection from point C, that high. You would take the height of this move and expect it to occur in the same height, and that's exactly what we saw. So this level where it found a little bit of a bounce on Thursday is a significant level to be aware of, at about 158, we'll call it. We are below the 200-day moving average as well. I think a lot of people were expecting that to hold. It didn't hold, and now we had gotten down to the 61.8% retracement. We'd seen the measured move. So I think that gold should probably begin to stabilize in here a little bit. But it's really kind of, I mean, it's still below a declining 5-day moving average. And as far as I'm concerned, guilty till proven innocent. So, be careful with gold. There's no immediate need to own it, I don't think. If we take a look at Apple, last week I had done a blog post about where it has the potential to catch a bounce. And we had spoken about these levels. These are, the Fibonacci off of the 2009 low to the recent high this year. And then we took a look at the lows from 2011 and did a Fibonacci off that. And we'll take a look at that in just a moment. But, the 38.2% retracement would have brought us down, would bring us down to about 465. We also have this trend line off of those 2009 lows right about that same area. Then when we looked at the daily time frame, what we had looked at was this, the lows from last year and the last time that trend line was touched to this year's high, the 61.8% retracement is down here about 495. So it still appears to me, we're clearly still in a downtrend in Apple. That hasn't changed. We saw a little bit of a bounce this week for a bit, but that failed. And now we look at, let's take a look at a 10-minute time frame. We've just got a real big mess in Apple. I think that even if Apple doesn't go on to meet those lower projections on the downside, that it's due to at least stabilize here through time, and we'll get smaller volatility, but we still run the danger of continued breakdown. I also wanted to take a look at Herbalife, because Herbalife's been kind of fascinating actually this year, that we had seen this one big sell-off, and then the stock tried to recover. Actually, in Alpha Trends last week, we were talking about it short down in here. Now, I don't think any of us held it through this, but it was interesting that, you look at the weekly time frame, it was clearly a damaged chart. And what we're looking at here on the weekly time frame is just trying to find some reference points to say, where's the potential for some support in this thing to be found? Well, we can look at the 2008 highs and see that we kind of came right down to that level on Friday. And another interesting thing here, very similar to what we had seen in gold, is the measured move. So we're just going to kind of spread this out a little bit so it's easier to see. And what we're going to do is we're going to take these two lines here, which let's just redraw them. What we'll do is we'll take a look at this high to this low right here. And so from that last big sell-off, if we draw a line in there, that's the height of that move basically. So what we're going to do now is we're going to grab that and put it right here. And right here. So this now, from the high of that bounce is basically what we're doing. And we're saying that if we go straight across, we're pretty much had another symmetrical move, where if you call this A to B and this B to C, this C to D. So what it's saying, really, what we can look for is, here we had a symmetrical move, the measured move, right down towards about that 27 level, and this prior level of resistance back from 2008, holding potentially a support in here. Now, you look at the 10-minute time frame of Herbalife, it's stuck below a declining 5-day moving average. The 5-day moving average is way up at $38 a share, so that doesn't really do us much good. When we take a look at shorter term time frames, if we take a look at, we could take a look at a 5-day chart and the 5-day volume weighted average price. So we're actually, so the volume weighted average price last week, if we were to get a bounce, I would think that maybe that would be resistance, and that's way up at $33 a share. However, I'm not suggesting you buy this thing. I mean, Ackman's talking about this company going to zero, his highest conviction trade ever, and that sort of thing. There's no evidence of a bounce in here, and I think a lot of people got crushed trying to pick that low this week. The point is that, picking a low or turn point is really the toughest job. This month, we'll probably see the highest volume that it's ever traded on a monthly basis. We clearly seen that this week was the highest it's ever traded. And I wanted to bring this one up just because, again, it's, it seems like, well, they've got a big company, they sell a lot of vitamins or whatever it is they sell. Could they really go out of business? That's not for us to answer, but you look at the chart and you say it's clearly clearly in a downtrend, lower highs and lower lows on every time frame. If you're going to trade this stock, there'll be a lot of action in it, and you have to really just kind of look at it on a tick by tick 1 minute chart. So, anyways, thanks for tuning in, and I hope everyone has a good week ahead, and Merry Christmas, and I will talk to you next week. Thank you.